Hey everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, February 4th, 2025. So, man, today we actually finished green, but I'm going to show you, they made me work for it because I got caught on the wrong side of this a couple times. And what I mean by this is that these divergences right here on the S&P 5, this is the spiders, has an upside target of 693.50. So when we hit here in the morning, we actually took a quick put trade, and from there I actually closed it at the support right here because I was anticipating we were going up. So I closed this all the way at 688. It went all the way down to 660, 686, and then when it started rebounding, I was convinced that okay, this is our ABC coming right up to the 693.50, and we were long the calls on that, and we would have been doing very well. But once we hit this moving average and things went straight down, I did not see that coming, and it was we I was swimming upstream, especially the quantum stocks are getting absolutely clobbered. So at one point we had the portfolio that was down. It was close to $6,000 just because, like I said, so a lot of the two of my positions that we have in there were down over 18%, and one was the IRN, which is it's a fast mover, but I haven't seen it down 18% in a long time. But in any case, so once we started going down, now I was on the defensive on it. So the calls that we had, the 690s, they ended up being wallpaper, let's say. But what happened is I started trading the S&P 500 with those ratio back spreads, and that made up a lot of the ground. And I doubled down. Well, I do this every time when the quantums are down more than 10, 20, say 10, 15, 20%, I automatically put the 500 and I put into 1,000, and they all rebounded, and that helped things out. But we made a couple good trades with the ratio spreads, and then we had one with the IWM that we had. So it ended up, but I had to work because when we were down here, things were looking bleak, and I was like, whoa, this is not going to be a good video report when I show what we did for the day. But once the spiders went over to 684, that was the cue that we were heading up to at least the 685 level. And unfortunately, that's where I closed that ratio back spread. I made like $1,200 on it, but we could have been up a lot more. But anyway, you can see this is the resistance line right here. This is the 200-day moving average on the 5-minute chart, and every time it comes here, sellers are waiting. So once the bulls can get above the 688.50 or the moving average, that's where I believe we're going to make a move up to the 691.50, and then up to the target that's here. That's going to be the 693.50. But here's the problem: when we made this move down, you can see we don't have any bullish, any buy signals. So right, we got it. I'm just gonna play it by, because we don't have any buy signals and we don't have any sell signals. So it leaves us going into tomorrow that these lows can be taken out and these highs can be taken out. If these highs are taken out, we're heading up to the 691.50. If this gets passed, then we're going up to this target. But the thing is that if we head down, we're taking these lows out, and from there, I'm going to move over to the S&P and say that we're probably going to come down to the 68.29 level, 68.30, because we're trading within this this little channel right here. And that's what I showed you last night, and that was on a different chart. This is it right here. So I said either I moved this already, but I said either we're going to come here and come down, or we're going to go straight up to here. We came here, came down, hit the bottom of it, and that's when buyers stepped in. Now, unless they can get above these levels, we're probably coming down to the 6,800 level, and you can see we have this open gap at the 67.94. So these would be my downside targets, and until the bulls can get above at least the 5-minute moving average, the Bears are in full control right now, and I wouldn't fall in love with it. This is just short term. I believe within the next week we're going to make a bottom, and you're going to see us making a move towards new all time highs. And then things are going to get really, really choppy. I think we're going to have smooth riding from March until April, possibly into May a little bit. But from there, there's probably going to be a bigger drop. But I'll go over that in the premium report tomorrow. But right now, we're battling within these two channels that we have. This is the bull channel. This is the bear channel. If this gets broken, and let's say these lows get taken out, then we're coming all the way down to this 67.36 level. So we have to really just be kind of careful right now, because these lows, you can see right here, there is no bullish divergences. So that's suggesting that the bear channel is in play here. And if that's the case, then we got to keep an eye all the way back down to this 67.21 level. And I don't not saying that can't happen. That's one of the support levels that I've been talking about. But if we come up, this is where, the bulls really got to break through these levels. But right now, I'm open-minded. I think that this bear channel is going to hold right now. So I'd be looking for a closure of this gap. We could break it a little bit just like this. And if the bulls step in tomorrow, then we're still looking at a move somewhere up into the, let's say, 60, 69, 70 level. But right now, this chop right now is telling us something, that this market is kind of fractured right now. But I still think we have another blow off top before everything is said and done. From there, I think this is going to last until May, but we have to make the low first, because the NASDAQ is absolutely puking. That's bringing the S&P down. When the S&P goes down, IWM goes down. The only index that was up today was the Dow, and I don't even know if it closed up. I know it was up a bunch earlier, but I don't really follow the Dow. That's why I'm saying it. But in any case, the NASDAQ, the techs are getting wiped out, but they always get wiped out once in a while, and everybody panics and they sells, and next thing you know it, you have all of them trading at new all-time highs. I don't think this is any different. We're in a secular bull market right now. We're going to get these big retracements because nothing goes up straight or down straight. So once this completes, we will make new highs. It's a matter of where does it complete from. If it follows this channel, we're heading back up to the 7,020, possibly 750. If it breaks this, then we're coming down somewhere into the 67, say 6720, closing this gap right here. So I'm torn on it, because we have these bearish divergences from up here. This is when I was warning, saying that we were going to have a downdraft, and here it is. I just didn't think it was going to be coming this choppy, this fast on it. But in any case, it is what it is. So let's go back to the S&P here and go to a shorter term time period. And here you can see, well, let me go, I'll even show you what happened. So this is just a 5-minute chart on the S&P. And you can see once we got into this is the 50-day move, the 200-day moving average on the S&P. Every time we got here, sellers showed up, and even at the end too, where they made this big run, once we got into the 200-day, the 200-day moving average, sellers showed up. So obviously, this is important. If the bulls can get above this level, they're coming back up to right around that 69.36. This is the bullish divergence target, all the way up at the 69.57. So if we could break to the upside, my target would be here and here. If we take out these lows, then most likely we're going to be coming probably all the way down to this level here, to this 6,800. So we got to be pretty careful tomorrow. That's probably the best way I can put it. But again, this is short term. Once this fixes itself, we're going to be good to go. So the fund overall, let's take a look at it. We closed up 2,300. It really made me work. We were, like I said, at one point the fund was down over 6,500. It was borderline one of the worst days I had. And you can see these are the quantum stocks. They got crushed. They're on their last leg down right now. So I've been carrying 500, and you can see this with RX. I never got filled on it. But what happens is when I see RGTIW down 20%, I add another 500 shares. That brought us from down, I mean, it was almost, I think, $900 to plus 50. This is really the one that killed me, IREN. That was I doubled down on that one and it kept going. So this is really the culprit of the why we weren't up $5,000 today. That and CCX, but these are good stocks. They're going to move up. Again, RGTIW, once it bounces back up to 15, we got to convert that to the common stock. I'm going to kind of trade that one because I'm going to wait for RGTI to come down a little bit. But this would probably be over at 30, 35. It come in May. That's what I'm anticipating. But we got to manage these right now. So let's take a look at IWM here. And hang on one second. All right. So IWM, that's a daily. We don't even. Well, actually, this is actually a pretty interesting chart because IWM, it got hit again. But you can see this is the 50-day moving average on the daily chart. So the 255.85 may be a magnet. I think we are going to come down here at some point. But each time, you look at this wick right here. I mean, we've seen buyers stepping in. So if it comes down here, I'm going to be a buyer of IWM. But if we take a look at the hourly chart, we still have these bullish divergences. Found support right at the 400-day moving average, and that's where it bounced. So if the bulls can get it above the 62, most likely we're heading back up to the 65. This is really where the breakout line is. If they can get it above the 266.75, say 267, then we're coming up and testing the 272 and then the 275. Those are my upside targets. So for tomorrow, I'm really going to leave this as I'm going to play it by ear. Any kind of huge gap up, I'm going to be a little bit hesitant because you don't have two panic days in a row and then all of a sudden out of the blue gap up and go. So I'm going to be more, a little bit watching how the tape goes. But these ratio back spreads I've been really liking them a lot, especially in these volatile markets. So let's see what plays out tomorrow. Have a fantastic night, and I'll talk to you guys in the morning.